Buying a home is a huge step, isn't it? It's a mix of excitement and nerves all at once. One of the biggest challenges is getting your mortgage approved. Think of a mortgage as a big loan that helps you buy your house. The bank just wants to make sure you can pay it back. This guide will break down the mortgage process into simple steps. It's time to turn that dream of owning a home into reality. Getting a mortgage might seem complicated, but it doesn't have to be. By understanding the process and following these tips, you'll be well on your way to getting approved. We'll cover everything from credit scores to down payments. Remember, knowledge is power. Let's dive in and get you ready to buy your dream home. Alright, let's break down how the mortgage process works. Knowing these steps can make it way less intimidating and help you get ready. It all kicks off with an application. This is your first move towards getting a mortgage. You'll need to share a bunch of details about your financial situation. You'll chat with the lender, like a bank, about your finances. This includes your income, debts, and any other money stuff you have going on. They'll check your credit score, which basically shows how good you are with money. A higher score can boost your chances of getting approved and might even snag you a better interest rate. Next up, the lender will verify your income. This step is super important because it shows them you have a steady income to make those mortgage payments. They want to see that you have a stable job and can handle the monthly payments. A consistent work history can really help here. They'll also check out how much you've saved for a down payment. The more you can put down up front, the less you need to borrow, making you a more appealing borrower. A bigger down payment means you borrow less. This can lower your monthly payments and cut down the overall cost of your mortgage. Finally, if everything looks good, you'll get approved for your mortgage. This is the moment you've been waiting for, and it means you're one step closer to owning your home. Now that you know the basic steps, let's dive into each one a bit more. Understanding each step can help you navigate the process more smoothly. We'll share practical tips to boost your chances of getting approved. From improving your credit score to saving for a bigger down payment, these tips can make a big difference. Remember, knowledge is power when it comes to mortgages. The more you know, the better prepared you'll be to make smart decisions and get the best mortgage for your needs. Think of your credit score as your financial report card. Just like in school, it shows how well you've been doing, but this time, it's all about your money habits. It gives lenders a snapshot of how you handle borrowing. They use this score to decide if lending you money is a good idea. A solid score can really open up some great financial opportunities for you. The higher your credit score, the better your chances of getting approved for a mortgage with a sweet, low interest rate. This can save you a ton of money over the years. Imagine the relief of knowing you're getting the best deal out there. But what if your credit score isn't so hot? No worries. Lots of people start with a less than perfect score and work their way up. It's a marathon, not a sprint. You can definitely improve it. Start by checking your credit report for any mistakes. Errors can drag your score down, so it's super important to keep an eye on it. Make sure to pay your bills on time and try to lower your credit card balances. Consistent on-time payments show lenders you're dependable. Lowering your credit card balances can also help your credit utilization ratio, which is a big part of your score. Even small wins can add up. Every positive step you take boosts your score and gives you more financial freedom. Think of a good credit score as your golden ticket. It's the key to unlocking a lot of financial doors. It opens up better loan terms and more options. With a good score, you have more choices and can score better deals, whether it's for a mortgage, a car loan, or even a credit card. So, before you apply for a mortgage, take some time to boost your credit score. Look up tips and strategies, and make a plan to improve it. It's an investment in your financial future. Your wallet will thank you. A better credit score can lead to lower interest rates and better loan terms, which means more money in your pocket. It's a win-win. Lenders need to know you can handle your mortgage payments. That's why having a steady income is key. They'll ask for proof of your earnings, like pay stubs or tax returns. If you're self-employed, you'll need to show your business records too. A solid job history is a big plus. Lenders like to see that you've been working consistently. If you've just switched jobs, don't stress. Just be ready to explain why. Remember, lenders want to feel confident that you can pay on time. Show them a solid income history, and you'll be closer to getting that mortgage approved. Section 5, Down Payment Power, Securing Your Dream Home. So, let's talk about the down payment. It's the cash you put down up front when you buy a house. Basically, it's a percentage of the home's price. The more you can put down, the less you need to borrow. This means lower monthly payments and a better interest rate. Saving for a down payment might seem tough, but it's totally doable. Start by setting a budget and sticking to it. Find ways to cut expenses and boost your savings. Even small contributions add up over time. Remember, a bigger down payment not only helps you get a mortgage but also saves you money in the long run. So, start saving early and watch your down payment grow. Section 6. Pre-approval. Your ticket to house hunting confidence. Before you dive into house hunting, make sure to get pre-approved for a mortgage. Trust me, this step can save you a ton of time and stress later on. Getting pre-approved means a lender has checked out your financials, like your income, credit score, and debt, and is ready to lend you a specific amount. This isn't just a rough guess, it's a solid commitment from the lender. Pre-approval shows sellers you're serious about buying, which can give you a leg up in a competitive market. Sellers are more likely to take your offer seriously if they know you have the financial backing. Think of pre-approval as getting a head start in a race. It puts you ahead of other buyers who haven't taken this important step yet. It tells sellers you're ready to go and can close the deal quickly. This is super helpful in a hot market where homes are flying off the shelves. Plus, it gives you a clear idea of how much house you can afford so you can stick to your budget. Knowing your budget helps you focus on homes that are within your reach, saving you time and avoiding disappointment. Pre-approval is a key step in the home buying journey. It not only makes your search easier but also boosts your negotiating power. When you make an offer, having a pre-approval letter can make your offer stand out. It not only streamlines your search but also strengthens your negotiating position. Sellers are more likely to negotiate with buyers who have pre-approval because it reduces the risk of the deal falling through due to financing issues. So, get pre-approved and shop with confidence. With pre-approval in hand, you can focus on finding the perfect home, knowing that you have the financial backing to make it yours. This peace of mind can make the entire home buying process more enjoyable and less stressful. Chapter 7. Financial fitness, organizing your documents. Getting a mortgage means dealing with a lot of paperwork. Seriously, a lot. Make your life easier by gathering all your financial documents ahead of time. This includes tax returns, pay stubs, bank statements, and any other proof of income or assets. Having everything organized will make the application process so much smoother and faster. Plus, it shows the lender that you're on top of your game. Think of it like baking a cake. You need all the ingredients, right? The same goes for a mortgage application. Having your financial documents in order is the key to getting approved quickly. Chapter 8. Let's talk about common mortgage mistakes. Even with the best intentions, we all slip up when applying for a mortgage. One big mistake? Not shopping around for the best interest rates and loan terms. Different lenders have different rates, so it's worth comparing. Another common slip-up is taking on too much debt before closing on your mortgage. Try to avoid making any big purchases or opening new credit cards. Lenders want to see that you're financially stable throughout the process. Just like avoiding potholes on a road trip, steering clear of these common mortgage mistakes will make your journey to homeownership smoother. Remember, knowledge is power. By being aware of potential pitfalls, you can dodge them and stay on track. Chapter 9. Your path to homeownership starts now. Congrats! You've made it to the end of our guide on getting your mortgage approved quickly. Buying a home is a huge step, but it doesn't have to be stressful. Follow these tips, and you'll be holding the keys to your dream home in no time. Start small. Check your credit score. Begin saving for a down payment, and get pre-approved for a mortgage. With some planning and effort, you can make your homeownership dreams come true. Section 10. Share your success story. We want to hear from you. Have you been through the mortgage journey? What tips helped you the most? Share your stories and advice in the comments below. Your insights could really help someone else achieve their dream of owning a home.